Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I'm your host, Juan Vargas. Today on the show, we have Michael Blanc. Michael is a multifamily investor, fellow podcaster, and mentor to those looking to achieve financial freedom within just 3 to 5 years by investing in multifamily properties. In addition, he's also the creator of the SDA, or Syndicated Deal Analyzer, a tool used for multifamily investing and underwriting. Michael controls over 24 million in multifamily throughout the U.S. and has raised over 6 million, and his students have purchased over 1,600 units valued at over 55 million. Michael, welcome to the show.
Juan, it's real pleasure to be here. Thank you so much.
Yeah, no, it's awesome to have you. And you know, I mentioned that you're a fellow podcaster. I listen to your podcast, quite frequently, and it's an awesome show. For those of you guys that are, just listening to this podcast, check out his podcast. It's great. You're going to learn a ton. He's got a bunch of awesome guests on his podcast, and he provides a ton of value. So definitely check his podcast out. And, so yeah, Michael, let's go ahead and, dive into your background a little bit. We'll, tell us where you're calling us from a little bit, and then we'll kind of, get into your background, and we'll fast forward to today.
Yeah, it's awesome. Yeah, so thank you, Juan. I have a background that's very similar to a lot of people, which is I was taught to go to school, get good grades, get a job with good benefits. I decided to go into software, so I was a programmer when I first got started, and I joined a small startup in the late 90s. We're in the right place, right time, had a software IPO in March of 2000, put a bunch of money in my pocket. And then I, read Rich Dad Poor Dad like 4 or 5 years later, and I was like, "Oh, I can't believe I'm such an idiot. It doesn't matter how much money I have in the bank or what my salary is. It's all about passive income." Mm-hmm. And my vision at the time was to become, just to start my own software company, because that's kind of what I knew, and I just threw that like 15, 17 years away, right? I decided to pursue financial freedom, but not with real estate. Oddly, it was actually my big idea was with restaurants. Okay, I was surrounded by a bunch of burger franchisees. It's a very successful chain. They're like, "Oh, it costs this much to open. You're going to hire a guy to run all the restaurants and then sit back and count the passive income." I'm like, "Wow, that's exactly what I want." So I took all of my chips and put them in the middle of the table, and basically bet big on the restaurants. Like, just that was my thing. Now I flipped some houses, and I learned to trade stocks and options. I went to an apartment building boot camp, started looking at apartments, did everything I quit my job, right? And went boom, full bore. And let's see what works. But my big bet was the restaurant. So long story short, the restaurant experience, I subsequently lost my IPO millions in the restaurant experience. Plus I added a couple $100,000 of debt on top of that, almost lost my house. And then clawed my way out with real estate. But like so many people thinking real estate, they think single family houses. So I was like, man, I flipped a couple houses a few years ago. Why don't I flip some houses? And so we did 3 dozen houses in, 3 years. I got into apartment building. And then, I was just like taking stock of everything that I've done, and I was like, man, everything had a fundamental flaw, like software, restaurants, house flipping, and then there was these apartments. Apartments just kind of quietly sending me mailbox money. I was like, maybe I should do more apartments. And
yeah.
And so I started blogging about raising money and about apartments, and kind of one thing led to another. How do you analyze it? We created the Syndicated Deal Analyzer. And now we have this educational platform. We have a podcast. We have coaching programs. We have live events. We have the book out, Financial Freedom with Real Estate Investing. And we have this deal desk program also, where we joint venture with people. They bring us to deals. We raise the money for them. So we've done almost 1,000 units in the last 18 months through that. So anyway, so that's kind of my story in a nutshell.
Yeah, that's pretty good, because you read the book, you got into restaurants. You felt like that was going to be your path, right? You ended up finding out that it's a lot more complicated than it was on paper, right? So then you got into single family homes, and you feel like that's when people think of a real estate, that's what they think about. They think about flipping, or as a realtor or whatever, right? That's what they think about. So did you make any money in single family, by the way?
I did. Yeah. Oh yeah. I make great money.
So what made you feel like, it wasn't going to be the path for you then?
I became clear about what I wanted. And I think this is an issue with a lot of people. They go to the monthly RIA meetings, and they go there. Why? They go there because they want to quit their job. They're looking for financial freedom, but they're all doing single family house stuff. And I equated financial freedom with single family house with becoming a real estate investor. So it's like there's a ladder, and I'm at the bottom, and I'm running up the ladder, and I become really successful in real estate investing, and then I realize that the ladder is leaning up against the wrong wall, right? I thought it was financial freedom, but it's not, right? Because I really became, I mean, the business came fairly big and complicated, and I couldn't take time off when I wanted to. I really didn't have that financial freedom at all. I was kind of like an employee in my own company. So yes, I was working for myself, but it's not really what I wanted, the end result. So I think people have to get very clear about what they want in life, and then use a strategy that gets them there. I'm not saying you can't get there in single family houses. I mean, there are people who have structured their single family house business in a way that does give them freedom, but it requires intention. It's not just going out and accumulating houses or portfolio or something like that. So when I took stock of what everything that has gone through and what I wanted, I became very clear that I wanted to control my time more. And it wasn't through, even though I was making money, that wasn't the problem, right? With the restaurants, not only was it not making money, it was taking all my time. So that was, two main problems. With the house flipping, at least I was making money, but it was taking up all my time. And with the multifamily, it's making money and I have my time back. And it really was that combination that I was looking for.
Yes. So what do you think, it's so difficult for people to grasp this concept? And, you think real estate, you think single family homes, I personally, I'll tell you a little side story real quick. I remember when I was, just, my early 20s, and I remember, going by an apartment. I was driving by an apartment. I'm like, man, I wonder what it takes to take down one of these, like to buy one of these. And then right then and there, it was mental for me. I was like, well, you know what? It's not for me. I'm just a little guy. There's all kinds of people. This is like for big, corporations or whatever. That was my thought. And guess what? I never looked back into it until just a few years, ago, and so, if I would have, stuck with it and, try to, learn more about it right then and there, then, who knows what could have happened. Right. But is it a mental thing, or is it just, education, or what is it?
Yeah, it's a little bit of both. And I was the same one. So don't feel bad. And most people are exactly the same way. And it kind of goes like this. I think, they hear me talk about, financial freedom with the apartment building. Goes, yeah, I hear you, but, okay. But, apartment buildings are kind of an advanced strategy. Why don't you, I'll accumulate a portfolio of rentals maybe for the next 5 or 10 years. I'll buy one a year and I'll take that experience and I'll take the money and then I'll graduate to apartment buildings. And that's not a bad plan. I mean, that's better than no plan at all. But the truth is, it's unnecessary. You can go directly in apartment buildings, and the case studies I have in the book actually talk about people from the time they get started to quitting their job. 1 year has gone by. I got several examples, and most are within two years of that. And that's very powerful because achieving that same goal with single family houses is very, very difficult. Very few people achieve it, and the ones that do take a long time, and it's a lot of effort. But they say, look, it's an advanced strategy, and there's two things, Juan, that people can't wrap their head around. One is, and it comes up through this, is I don't have the experience, and that, you said that. You said, oh my gosh, I see this apartment building, I don't have the experience, and I don't have the money. And those are two objections that are so huge, and this is why people simply dismiss the apartment buildings. Now, the truth is, and this is where education comes in, neither are necessary. You don't actually need previous experience, single family house or otherwise, and you don't need your own money. And that's what I find so encouraging about getting into this kind of investing.
So you don't need your own experience, you don't need money, then how can they actually get involved?
Well, good question.
I mean, what can they do? Because those are the two main things, right? Like for most people out there, I don't have the money, so why even bother? Why bother to look at it if I need the money? And, or I don't have the experience, so how can I go out there and talk to brokers and talk to property managers, to talk to owners? I mean, I can't go past this.
Yeah, so there's two main mistakes that I made and that everybody else makes. They get the bug, maybe they read my book and they go, this is great. And they start immediately calling up brokers, and the broker immediately says, hey, that's great, Juan. Why don't you send me your proof of funds and I'll send you more information. And that is now a telltale sign that you sounded like a newbie. And probably made 3 mistakes in doing so, which is going to be very difficult to recover from, versus, educating yourself a little bit. It's not like you have to educate yourself for years on end. These are things you can learn very easily in 30 days, but using the right language. That's the first thing. Maybe using the right scripts. And that's fairly easily learned. And then build a team around you. Okay. So if you have nothing, you have no money, no experience, except for a smile on your face. Okay. If that's you, then you need to build a team around you. So you look for the best daggone property manager in town, the best real estate attorney. This might take you 30, 60 days to find out who that person is. Then you get Sam on board, who manages 8,000 units, in Atlanta. And then you call up your broker and said, you're using your script that you're working with Sam at so-and-so. And they're like, oh, Sam's a great guy. I've done a bunch of deals with him. All of a sudden, you're not talking about you. You're talking about Sam, right? And you've built this impressive team around you, and you've made up for your lack of experience. And so that's how you very, very quickly, with a little bit of education, you overcome the lack of experience.
So you mentioned, working with others, right? And you basically are leveraging their experience, their track record, and all that good stuff, right? So what about the money part?
The money part. Oh, almost forgot about that. So when I started flipping houses, I didn't have any of my own money because I deployed it all in the restaurants. It's not like I kept a bunch of powder dry. Very little, but it was that was my big idea, if you remember. So when 2009 rolled around, I was like, man, I got to get me some of these rehabs. And so I just started talking to my friends and family, and, they were willing to invest $25,000, $50,000. And I was like, wow, this giant light bulb went off that I could do something without my own money. Like that was like, I didn't know that was possible. And so through that experience, and then using in apartment buildings, et cetera, I kind of developed a system for doing that. It's not a complicated system. You just got to kind of work the system. The biggest idea is that you can go into your sphere of influence. You share your enthusiasm with people. If people are interested, they might find out more information. They might refer you to people. The real idea is that you start raising money from day one before you actually put something under contract. Because imagine this. I mean, if you have no investors, I mean, how confident are you for putting an offer on $1 million property? You're like, not confident at all. Like I wouldn't even do it. People have. I'm like, it's way too stressful. On the other hand, if you spend 30, 60 days talking to people, and you have 5 people that are interested in investing $50,000, now you have $250,000 behind you. Now, how do you feel about making an offer? Well, I feel much better about making an offer. And so that's really the key to it, is intentionally engaging with people, building relationships with people, and getting them comfortable with investing with you. So when you do find a deal, it takes you a few days actually to firm up that commitment and get into that deal. So that's really the secret is raising money and doing it, from day one. So
like you said, is to build those relationships from the get-go, maybe 30, 60, 90 days upfront before you have a property identified. Once you have a property identified, you have the capital to kind of back you up. And then you can go out there and find the deals. So how can they connect with brokers? What are the key, what's the key language that somebody can use when talking to brokers? Because I know you mentioned that earlier. If they're asking for proof of funds, then that's probably a good sign that you don't have a lot of experience. Because, if for most of you that have been in this business for a good while, that they don't usually ask for proof of funds. They'll ask for an LOI. They'll ask you where you're getting your equity from, maybe, but they're not going to ask for proof of funds because they know that this is a team sport, right? So what can they do? What can they say?
All right, let me give you an example, right? So when I first started calling brokers, I say, hey, my name is Michael. I'm a real estate investor. I'm looking for apartment building deals with a 10% return. Are there any deals you can send me? It sounds pretty good on the surface. And the next thing I got was, hey, send me your proof of funds. I'll send you more deals. And I was like, my proof of funds sucked at the time, right?
Yeah.
And I was like, why? What is going on here? Why am I getting this? Why am I not overcoming that? And I was making several mistakes using that approach. Number one, I wasn't using the right language. Number two, I didn't have my team built. And number three, I hadn't started raising money at all. So, for example, in 60 days goes by, and I might say something like this. Hey, my name is Michael. I'm working with a group of high net worth individuals. We're expanding into the Atlanta market. I'm working with Sam Broker at XYZ. We're looking at at properties with a 7 to 8 cap, and we're okay with value add, but no repositions. What do you have right now in your pipeline? Holy cow! I use some words you might not recognize. Like, what the heck does that mean, right? The broker knows exactly what it means. I know what it means. But not only am I using the right language, I'm doing two other things. Number one is I'm addressing the money part. I'm working with a bunch of high net worth individuals, so that triggers that one. And number three, my experience part, I didn't say I have 1,000 units. I said, hey, I'm working with Sam Broker over there. property manager. So I've addressed the experience part as well. And now if this person asks me for proof of funds, I mean, I might have 10,000 units. I mean, he might now offend me at this point. And very few brokers are smarter than that. They're going to go, let me check this guy out. Let me send him a deal and see how he responds. And he's not going to offend me with proof of funds. And that's the difference. Yeah, well, that makes sense. You know, it's having the team, like you said, having everything lined up before you go out there and talk to the brokers. And now I do want to mention that, you know, talking to brokers is not the scary. It's not really that big of a deal. You know, like once you learn the language, once you're confident in what you're doing, it really isn't that big of a deal. You know, there are people just like me and you, no different, but you do have to be prepared as far as, you know, having all your ducks in a row before you approach them, because, you know, they don't want to waste their time. And that's frankly, you know, they don't feel like wasting their time with somebody that's just going to be kicking the tires, really. So, so now having said that, okay, so we addressed this part about, you know, talking to brokers and all that good stuff. Let's kind of dive into the markets. You know, what markets are you seeing most of your students looking at? Because, you know, we are like towards the top of the market cycle, right? So, I mean, are you getting a lot of different like deals and from all over the country, like, you know, or like what specific, you know, parts of the country are they looking at more mainly? Yeah, so I talk a lot about that in the book. In week 2 of this entire 12-month process that I outlined in the book, it's really getting clear about your first deal. How big is it and where is it? And so we have a methodology for determining that. I mean, to make it short, really, is we're looking for a market that still has a potential for yield, right? So actually cash flows, and a market that is growing with employment. So for example, San Francisco might be growing like crazy, but there's no yield there, right? So as a result, you know, there's no really deals being done in San Francisco. On the other hand, you might be in Podunk, somewhere in the middle of nowhere, and the cash on cash return is like 12%, but there's like no job growth. So maybe we stay out of that market as well. So the intersection of that is going to be towards the middle of the country: Oklahoma City, Indianapolis, the Southeast, right? Alabama, to some degree, Memphis. We have some stuff in Memphis. So the growth is not that, but the cash flow is enormous in Memphis. And so those are some of the areas that we're in. Got it. And so how do you keep I guess yourself, you know, this is more of a personal question now, like how do you keep yourself from being too competitive out there? And, you know how it's pretty heated out there. So how do you keep yourself and your composure from overpaying on a lot of these deals nowadays? Yeah, you have to get very clear about your investment criteria. And so it's a combination of having a strong financial model and really sticking to your guns. So, you know, you mentioned a syndicated deal analyzer. That's something that's available for purchase. We have it in our coaching program, training program. You need a financial model for everything you do in multifamily, and to some degree also with single family houses, but certainly in multifamily. And the SDA makes it very simple to do very powerful things. So you need something like that. But even if you have something like that, it might still give you enough rope to hang yourself on, right? So I could very easily relax my return criteria, or I could underwrite it aggressively. You know, I could maybe, you know, I could maybe over project my rents. I could under project my expenses. I could over project the sale price in 5 years, right? And we see people like that all day. They're advertising a 17% return, and when you look at their assumptions, they're like, wow, this is going to go to hay in a handbasket here, the way they've underwritten this deal. So you need to be conservative about your underwriting, and then you just need to stick to it. I mean, the nice thing about the SDA, once you have your investment criteria defined, it's a very black and white thing at that point, right? I mean, if you do the underwriting that we teach you, and let's say your investors are looking for a 15% average annual return, if that's your investor base, for example, well, anything below a 15% return is out, right? 14.9 is out, right? And it makes it very kind of black and white. Now, it's a little more complicated than that because emotions are involved, of course. But really what we see a lot of people doing is they are becoming more aggressive on their underwriting, and they're relaxing their criteria. And that's dangerous in any market, frankly. And because it's a little harder, because people have to work a little harder at something, we're seeing people cut some corners. Yeah, that's not good at all. So I do want to mention the SDA. I actually have the SDA, and I think it's a great tool. It works, fantastic. So for those of you guys, thinking about it, then definitely look into it. But I do have to say this as well.
there's more to just to having an analyzer. There's studying the market. So you have to. I think those are two very important. Maybe side by side. Really, the actual property itself, the property fundamentals, and then the market itself, because you got to know what the market is doing. Like you said, are you having population growth? Are you having income growth? Are you having job growth? I mean, what's going on in this market? And so you have to study the market just as much as you have to study the property and analyze the property and the numbers on the property. So just wanted to throw that in there as well. So yeah, Michael, I think it is time for our nuggets of wealth. And these are questions that I ask every guest every week, and hopefully they are able to help them out. Right. So what is the key tip or advice that you will give to others who are looking to take their business to the next level, or maybe get into apartments?
Yeah, I think one is clarity. Really being clear about what you want. And with that, also to have an open mind. And this was certainly an issue for me and many others, not being clear about what we want and not being open to, for example, this particular idea about apartment building investing. I think if you're, and I'm not saying that everyone's going to be an apartment building investor, but I think there will be a lot more apartment building investors if people are very clear about what they want and they have an open mind. And this is really why I wrote the book, is to kind of dispel some of the myths out there, and just keep an open mind to it. Because I do think that, if more people are financially free, more people would do what you're doing with a podcast, or they might write a book. What I find is people who don't have to work for a living anymore, 50 plus hours a week, and they have this giant vacuum in their brain, they have to fill it with something. And most people who have reached that level of success are going to end up, I find, typically looking for ways to serve other people. And that's really, really powerful. And so really more people need to be able to experience that. And that's really why do you even want financial freedom? So it's really clarity of what you want, and then having an open mind. And, at that point, next step is obviously educating yourself with any strategy you learn, whether it's wholesaling or this. Once you're clear on it, then my gosh, invest in that, right? So why not do that? It shortcuts the process, and then just take constant action. But I find once you're clear on it, all those things are like secondary. It's people who don't take action, I find, Juan, are not clear about what they want. They haven't really decided what they want. But if you're clear about what you want, there can be no other outcome but you taking action. It will be incongruent with the decision and the clarity you've already established.
Great answer. And I would say, even to add to that is to invest in yourself. Once you have clear goals that what you want to accomplish, you want to accomplish financial freedom, you want to get to that point. It's very important for you to invest in yourself. And part of that is, invest in the tools, and the people that are going to help you accomplish those goals and get to where you want to get to. So that is very powerful. What is one key tool, source, or platform that you use almost every day that can also help others?
Well, syndicated deal analyzer is something we use literally every day. So that's certainly one thing. I mean, there's just so much technology we use in it every single day. Technology for us is key, just because we're a virtual team. We do stuff all over the country.
The SDA is great. That's a great tool for those of you guys that haven't purchased it. Then he has it on his website. So I don't know how much it is. Maybe you can talk about that. But it's very affordable and it's very powerful, and it'll definitely help you out. So, what is the book that you're currently reading?
I'm currently reading Elon Musk, and I'm just fascinated with people who are just big thinkers. And yes, he made a bunch of money, with PayPal. He had a bunch of setbacks, but then once he had that money, he was like, he didn't want to make more money. He wanted to literally change the world, and anything less than that was not interesting to him. And I find that fascinating. I mean, he's a little eccentric, he's a little weird, but definitely I like to study people who just think big. And I would say I'm an okay big thinker, but not nearly as like Elon Musk, for example. So that's what I'm reading right now.
Yeah, he's on another level for sure, because I mean he's trying to get people on a different planet. That's crazy. Like who thinks like that? Like this guy is a genius. So I love that guy. I love his books, and so he's great. I also know that you have another book. And so let's kind of talk about that a little bit. And it's your new book is called Financial Freedom with Real Estate Investing.
That's right. It's this yellow book, Financial Freedom with Real Estate Investing.
Okay.
It's on Amazon.
Okay. So tell us a little bit about that book and what it's all about.
Yeah, it's really about the journey, the blueprint to quitting your job with real estate, even if you have no experience or your own cash. I mean, we kind of be talking about it. Notice how I don't use apartment buildings in the title, because I already know the response that it elicits, and I don't want that response, because I want you to go in there with an open mind. The only thing that's required of you is that you're thinking of financial freedom and you're thinking of real estate investing in some shape, form, or fashion. And if you're thinking that, then this book is for you, because I take you in a third of the book on that mindset journey about, hey, first of all, what are the benefits of multifamily? And I talk about a dozen people who have quit their jobs with it. You're like, wow, this is actually possible. And then we talk about, how it's possible and how you overcome some of the experience, the mechanics of raising money. And then once you have, at that point, we spend the rest of the book essentially breaking down the steps to doing your first deal. Because it's not as complicated as how do I get 500 units so I can quit my job? It's not that at all. It's much simpler than that. It's basically your first deal. So I have this thing called the law of the first deal, and it says, if you do your first multifamily deal of any size, you will be financially free in 3 to 5 years. It's like this universal law. I haven't found a single exception to the rule. Even if you start with a duplex, the law still applies. And that's really powerful because now I just have to help you do your first deal. And if I can do that, the second deal follows in rapid, almost automatic succession. Like, you don't even have to try. It just happens. Like, you'd have to spend more effort not to do your second deal. And then your third deal follows as well. And most people are done with 2 or 3 deals. They've covered their living expenses because the deals progressively get larger. They don't all stay at a duplex. They go from 2, 10, 25, and then 50 plus. And so it doesn't matter where your entry point is. If you start at a 50 plus building, you're going to be, the next entry point is going to be 100 plus. If you start at a 10, then second deal is going to be 25. If you start with a duplex, it'll be around 10. And so every progression is like that. It's like some kind of universal law. I don't know. But the point is they keep getting faster and they keep getting bigger. So this is why you can achieve these financial goals so quickly with apartment buildings.
Awesome. So it just keeps getting better. I guess the longer that you stay at it, the better it keeps getting for you. So that's what it's all about. Where are you looking to take your business here in the next 5 years? Where do you see your business?
Well, I mean, I'm going to continue building up the educational program. I feel really passionate about this message. I've done a lot of shenanigans, and I want people to shortcut their journey to financial freedom. I had a pretty rocky one. I see people either not achieving that goal or taking a really, really long time to do that. So if I can help shortcut that, that's certainly one. And, we're going to continue doing deals. We'll probably get to 10,000 units in the next 5 years or so. And it's really by joint venturing with people who bring us deals. It's just very satisfying to see someone do their first deal, and they might bring us a 50 unit deal, and they're like, oh my gosh, this building is so big. And we're like, oh my gosh, this is so small. Yeah, and we'll help them do this 50 units kind of as a favor to them, but then they don't do another 50 units. They're like, oh my gosh, well, shoot, I'm going to do 150 unit, right? And so then now we do 150 unit, and then that person, and we have 2 people like that now. They're on their third deal. They bring us 500 unit deals, and they're essentially stretching our capacity to raise money for these things. So I'm just trying to stay ahead of everybody right now. So yeah, that's kind of the plan for the next few years at least, and who knows what'll happen.
Okay. At the end of your life, Michael, how do you want to be remembered?
That is a great question. I think I want to be remembered for someone who has served humanity in some meaningful way.
Okay. That's a great answer. I love that. Where can Commit to Wealth Nation go to contact you and find out more about you and your programs?
Yeah, so the book is Financial Freedom with Real Estate Investing, and that is on Amazon. It's a bright yellow book. Can't miss it. And I am at themichaelblank.com. That's THE, Michael, and then Blank is spelled BLANK.com. And I have podcasts, I have YouTube channel, I have blog articles, I have a bunch of free stuff so someone can wrap their head around it. And if someone's ready to invest in themselves, we also have online training and coaching programs. We have live events, and we have masterminds as well. So we have hopefully something for everyone.
Sweet. Yeah. So guys, if you guys want to learn more about, investing in apartments and becoming financially free here in the next 3 to 5 years, then definitely check out his website and reach out to Michael. So Michael, thank you so much for the time, and I greatly appreciate it, and I wish you continued success.
Hi, Juan, thank you so much for having me on the show.
Yeah, thank you so much.